Hello everyone, welcome to the channel. I always say during expiry that if you're trading in the current expiry, make sure your lot sizes are small. If you're trading in the next expiry, then you can increase your lot sizes and you can also go for a longer time of holding. The reason why I keep saying this is if you see in 15 minutes chart, right? If you see here, market opened slightly gap up and market tried to push up. It faced resistance here. Multiple times it faced resistance here. The moment you see such kind of a big engulfing candle, you will think that market is going to go uh, above the range, and market we can capture CE today and we can make so much money. All that thoughts will come up unless or until you don't have a plan. Make sure you make a plan when it comes to execution of your trades. If you don't have any trade plans as such, this sideways range will eat your complete capital. Why I am saying this 100 times during every expiry. Here, if you had entered call and this candle would have wiped away your profit, you would have booked your losses here and you would think like market is going to go down. You will enter put here, market will reverse, and then you will think like, okay, my initial thought process only was right. I'll enter call here, again reverse, put here, reverse, call here, reverse. This is what will happen in a sideways market unless or until you don't have a plan. So having said that, if you see here, tomorrow's prediction is going to be very easy and very clear cut also. We have a demand, several open demand zones sitting here in 15 minutes time frame. If I go back, we can clearly see that there is a demand zone sitting here. This is an equilibrium. This indicator I have told you to add it in your charts. It is very helpful to make you understand where is the supply zone sitting, where is the equilibrium sitting, where is the actual big money or big demand zone sitting. So you can plan your trades properly when it comes to this particular indicator. If I just show you back a little bit in this indicator itself, you will get to know that when this market fell, there was a strong discounted price available here. That is the reason we saw this rally to the upside. And when the market came back here, there was a strong rejection which is available here, and the initial reaction was got. Then market came back to retest this particular supply, and a beautiful fall happened. Till where the fall happened, that is also very clear that yesterday we had this open demand. This is where the target happened for today. See, having this kind of a clarity is what you should have. If you don't have this kind of a clarity, you will end up firefighting with the market and you will end up losing your capital. Make sure you preserve your capital, especially only on expiry days. Rest of the days also it's very important to preserve, but the if you have 1 lakh capital or if you have more than 1 lakh capital, make sure you're trading with 10 to 20k from that entire capital, or even you keep only 10 to 20k in your demat account and start trading with that. Till the time you are not having any kind of a plan and you are following some kind of a telegram channels or following some kind of a YouTube live videos where people come and say like, okay, you can enter call here, you can enter call at this price, this is your SL, this is your target. They make their plans and they will enter much earlier than you, and the moment you enter into those call positions, it is just volume gathering for them. They will book their profits and they will come out. You will not even know that they have booked their profits. You will end up holding the trades for longer time and you will be facing losses. It is your hard earned money. Understand this point very clearly. It is your hard earned money. Don't lose it for someone else. Okay, please spend time learning the charts, learning how the market works. At least stick to one strategy. I'm not saying follow only this particular strategy which I am following, and I'm never saying that this is going to give you 100% results. No strategy, I'll repeat this, no strategy will give you 100% accuracy in market. Every strategy will have a failure rate, and it all depends on how you manage your risk appetite and plan your trades accordingly. Okay, so what we see from a day's perspective here is there is a gap here, there is a gap here. Okay, these two gaps primarily has to be filled. Earlier there was a gap here, but this gap was retested on Friday, And today there was not a drive follow up as part of yesterday's bullish momentum. There was no drive up which was obtained. So eventually there was rejections faced from the market. This is how you should understand the candles. Buying momentum started from here, selling momentum started from here. So clearly the range is above this. Buyers might step in further aggressively and sellers can exit their positions. And below this, we can clearly see that buyers have stepped in here. So when the market goes below this, sellers can aggressively enter again and buyers will step out the market and there can be a bigger fall. Okay, so this becomes very clear. This is going to be our trading range. Anything which is going to happen between these two ranges is going to be our primary focus for tomorrow. Okay, so if I go back here, so what do we see here? We see that there is a small buying pressure which started from this, and we can also see this range is efficient, meaning every candle to candle has been retested except for this candle. That is the reason you see this gray bar which is automatically been shown by this indicator, meaning there is no other candles below this particular green candle which has not been retested. Every candle to candle has been retested by a wick. So the ideal trade which I am interested tomorrow is, even if the market comes down like this, opening flat or opening gap down, if it comes down like this and taps into this demand and gives a positive reaction like this, I am interested to take the market higher till 23,700 back. This is going to be my best to best trade for tomorrow. If market opens gap down somewhere around 23 450 460, somewhere in this range, it becomes even more easier because the place where we have closed is 23 600 range, and the place where we are planning our trends is somewhere around 23 440. This itself is somewhere close to 150 points range. Market will not move more than 100 points. Okay, so if market slides down like this faster, then market might go in a range bound in the second half session and there will not be a significant movement in the upward direction because tomorrow is not an expiry. Okay, tomorrow is not a Sensex expiry or an Nifty expiry, so there cannot be a one-sided momentum which can be expected. Okay, so if market opens flat and comes down, don't hurry into selling. Okay, focus majorly on buying when the market comes here. On the other case, if market opens flat and tries to go up, okay, like this in a smaller time frame, like a 1 minute time frame like this, and gives a negative reaction from this place again, I'm interested to take the market down. These two are the clear cut plans which I am interested to execute in the market tomorrow. The reason why I'm saying this is there is a supply zone sitting here in 15 minutes time frame. This supply zone is what I am primarily interested from to short the market, because above this range everything is efficient. Till here there is no other inefficiencies in the market. There is a small supply zone sitting here, but my primary focus is to short the market from here. If this does not happen and if the market goes very fast with a momentum and gives a negative reaction from the second supply, I'm interested to short the market from the second supply. See, whatever happens, keep your risk appetite to the amount which you can bear losing. You need to make sure that every entry you're trading, when you're taking into the market, whenever you're entering into any kind of trades, you have to put a line in the chart saying like, above this I am exiting my position no matter what. And till the time the position reaches here, I will either trail my position or I will book my profits or I will hold the trades till the point my target is being hit. This is how you should have your mindset. Make sure you work on creating a plan first before executing. The moment you create a solid plan and stick to your plan, stick to your plan at least 5 days in a row. If your plan doesn't come, don't trade. If your plan comes up, make sure you're trading with the considerable amount that even if your SL hits, you should be okay with accepting the loss and closing for the day and plan for the next day properly. Thank you so much for watching. We'll meet in the next educational video.